What's going on, everyone? It's Hootmoney here with another video for you guys today. Today we're going to be talking about BBIG stock, Vinco Ventures. Once again, we were down today, but we're not out. We lost the battle, but not the war. I promise you guys. Drop a like on the video if y'all enjoyed this content. Subscribe to the channel if y'all are new. Without further ado, let's get right into it. All right, so Market Cipher weekly candles. You can check out Market Cipher with the link in the description below. However, we're still on this negative momentum wave. You're supposed to be buying when this thing is on the lower side of this zero figure right there. So when you're in a negative momentum wave, it means that longer term you could experience some upside. And again, this goes along with the theory that IWM, the small cap ETF that has BBIG in it, will likely reverse at some point. I mean, most stocks in that portfolio are very, very oversold right now. Jerome Powell gave the magic word, 25 basis point hike yesterday. So it all looks good in that. The daily chart is also very oversold. And we're about to get the crossover. We're about to get a nice green dot. I don't know if we're going to get the big green dot. The big green dot usually comes down here, and then there's a small green dot that comes up here. But we will be getting a green dot, which is a bullish signal. And when you're getting it on a minus momentum wave like that and a green dot, and we got that hint from yesterday with that increased volume that we may come up. Also, the bearish money flow right here on BBIG, it's also curling up, right? So we're going to have green money flow soon. It's looking good there as well. 4-hour chart, we have BBIG right here. It's chilling at this level 241. It's getting comfy with that level. I do think if we actually, let's just scroll in to the 1-hour chart. It shows what my opinions are a little bit better. So we have two spider lines right here. So we could potentially get a bounce off of the 237 level. I think that could be a solid level. As you guys can see, it's bounced off this spider line 1, 2, 3 times right there, and it dipped down to the lower spider line right down here, 233 cents. So if it goes down there, that would bring us to about 233. So those are the bouncing points that I'm looking out for. Also, potential resistance at $3 a share. There's a big time fib level there as well. So that's what we're looking at in the hourly chart. Obviously, today we did come down. However, we are somewhat forming higher lows, and if we don't go all the way back down to 233, where it was before, then we did officially form a higher low, and it'll be an uptrend. As you guys can see, here was a 1 low, here's a second low, and then here would be a third low. So it does look like we are in an uptrend. So that is good. Moving into the short squeeze analysis, we are number 52, I believe, right here on the short squeeze leaderboard. We are marked as a threshold security as well. Moving into the Ortex data right here, you guys can see we moved back up to 100% utilization. So I'll be watching this cost to borrow figure. We'll see what happens with that. Usually the cost to borrow figure does go up, puts more pressure on short sellers. And we also have the short interest, very similar to that shares on loan, less room for funky business. We're going to move into Fintel right here. As y'all can see, it has 300 shares available as of 7 hours ago, which disagrees with what Ortex says, 100% utilization. It is what it is. Even at 100% utilization, even if they have 100% utilization for weeks, they are still going to short this thing. They also have the cost to borrow coming down, seeing a low yesterday and today of about $8 or 8.5%. They have that as their cost to borrow. Ortex has it at 10.91. Ortex is usually slightly higher, which kind of shows how retail gets effed with the data. How Fintel's number for cost to borrow and Ortex's number are always pretty different. Short volume ratio was also pretty high, 53%. It's been over 53%. It calmed down for a little bit here, but now it's back over 53% once again. Absolutely, I just don't get how this keeps happening. And then, yeah, those are the failure to delivers. We already went over that in yesterday's video. If you want up to $7,000 in free stock, we'll make this one fast. Sign up for Moomoo, licensed FINRA broker, no payment for order flow. You click that link in the description or pinned comment section. You make an account, you link your bank account, you deposit $1 up to $7,000 in free stock. It's free money. Get Apple stock, Amazon stock, Google stock, potentially. You name it. Links are below. Let's get right back into the video. Moving into the unusual whales flow, we're doing the normal flow right now, 10K premium or more. bid and ask side. So we usually just look at the ask side. There was only a bid side option today that was over 10K premium. So the 14K premium right there, selling a $1.50 call option expiring 2024. So this is an in the money leaps option, which was sold. So they probably have shares of BBIG, which makes it not necessarily a bearish strategy. However, it is in the money and it was sold to open. So this is probably synthetic short interest right there, if I have to be honest with you guys. If we bring down the premium to 1,000 premium or more, we're going to leave on bid side. We can show what the sentiment was. It's pretty split 50-50 right there. But if we get rid of the bid side, you guys can see, boom, it goes up to 72%. So what the heck does this mean? It means that people who bought call options yesterday, people who chased, people who FOMO'd on that volume spike, sold off their call options. And we'll get more into that in just a moment. Here we have the historical flow breakdown. As you guys can see, we're looking at call option volume. I just wanted to point out we're at a new low right here in call option volume. According to Unusual Whales statistic, they have it at 34,000. The only other two times since August where call option volume got this low was right here at the beginning of January, where it dipped under to 29,000 right there. And right here in August of 2021, where it dipped down to 32,000. So the only other times where call option volume was this low was before a mega rally. In August, it ran up 450%. In January, it ran up 150%. So we're showing similar call option volume values right here. And the past two times, a similar volume led to an enormous run up. I mean, it's not financial advice. Anything could happen. It could keep going lower. However, I do personally think, again, not financial advice, it's better to be buying call options during these times right here. Moving into the intraday analysis, we can see the biggest option trades of today. And this is what I wanted to show you. This is why the bid side made things so much more bearish, because there was a ton of selling call options. And you guys see, there's no put option. So people aren't necessarily betting that BBIG stock goes down anymore. People were just offloading, selling their call options. Literally what happened was people bought it on that pump yesterday. People FOMO'd into it right here. I mean, you can see it in the volume. If we pull it up, there was so much volume on that pump. It was a FOMO fest, and now it's sold back off to where it was before, forming a higher low, albeit, which is still very, very good for BBIG's uptrend. It's just sad that this happens. You know, people buy in calls, they sell it the next day. All of these are under 10,000 premium or more. A few of them were probably some of the whales from yesterday selling it for a loss. It's just not something you necessarily want to see. A 3-4 expiration. So this expires literally tomorrow. They sold for 9K premium right there. Moving down here, there was some dark pool volume yesterday that likely contributed to pulling this share price down. There was a lot less today, so it was more of a natural sell-off as of today. And we can see the gamma exposure. There's a massive ramp here. Since BBIG is around $2.50, it's not showing the higher strike prices, but there is positive net gamma exposure, which is this purple right here on every single strike price of BBIG. There's not a single one that has negative gamma exposure, and the $5 and $6 strike prices in particular also have a ton of gamma exposure. And I like to describe these as Mario Kart booster pads. As you're running along, you're coming across a strike price, boom, you get a booster, right? You're coming along, you go across that strike price, boom, you get a booster. You're coming along, you're going against that strike price, boom, you get another booster. And this is on almost every single strike price of BBIG, and it gets really crazy around the $5 and $6 range. This means there are volatile moves to the upside, which you can capitalize on by buying low, buying when that call option volume is low. But at the same time, it also typically means more volatile moves to the downside. This stock is heavily influenced by options, which is why the price action right here of the call option volume is so correlated, so similar to the actual price action of the underlying stock. It's not like this on other tickers, right? You can look at AMC. It looks completely different than the price action of AMC. You look at BBIG, the call option volume tracked over time looks almost exactly the same, which is why I think it's such an important indicator. Anyways, my friends, that's about it. Hope y'all enjoyed the video. Drop a like if y'all did. Come on, it's free, baby. Like button is free. So hit that like button. Subscribe to the channel if you are new. Check out Moomoo if you want literally free money up to $7,000 for depositing $1 on their platform. That link is below in the description or pinned comment section. And if you want all of my buy and sell alerts, you can find that using the first link in the description. Anyways, my friends, that's about it. I'm signing out now. Peace.